Hey, how's it going guys? Just want to drop a very quick video and share with you guys one of the best performing sectors, the energy sector, especially the oil market, is about to have a pretty massive breakout. There will be a lot of money to be made in this sector over the next 3 to 6 months. In fact, even Goldman Sachs sent an emergency market update to the institutional clients 24 hours ago just on this potential oil market breakout, and they recommended their clients to put on several long oil trades as soon as by this week. S&P 500 has been experiencing some really strong headwinds since early September, especially those large cap tech stocks and high growth stocks due to the long-term yield breaking out to the upside. But the energy stocks are still holding strong and continue going up with a really strong momentum, outperforming every single other sector during this market correction. If you want to make a killing over the rest of 2021 where everyone else could be losing money, then the energy sector, especially the oil market, is where you should really pay close attention to. So in this video, I will share with you guys a detailed overview on the entire oil market outlook and some of my personal thoughts on where the most profitable opportunities are. Before we start, this video is brought to you by our today's sponsor, Interactive Brokers. Personally, I've been using Interactive Brokers for more than 8 years, and it's definitely a game changer for my entire trading and investing journey. If you're looking for a broker that has the lowest trading fees, lowest financing rates, and the most importantly, if you wish to earn some nice passive extra income from the stocks you invest in, then Interactive Brokers is definitely the best one I would highly recommend. If my videos on this channel have helped you before, or if you got any values from this channel so far, please do me a favor and support this channel by just simply clicking the link in the description below. There's no sign-up requirement, you don't need to register any account. All you need to do is just simply click the link below. Your help and the support means everything to the channel. Thanks so much guys, and let's come back to the video. First of all, I will quickly go through the emergency trade updates that Goldman Sachs sent to their institutional clients. These are the important summaries of this report. Even just the title is already showing us how bullish Goldman has been on the oil market. Basically, there are two key highlights that I want you to pay attention to. First, Goldman believes that the global economic recovery and the demand for oil has been growing faster than the consensus forecast. But on the other hand, the global supply actually grows below the consensus. What Goldman was referring to can be visualized on this chart pretty clearly. As we can see, back in the beginning of the second quarter of this year, Brent oil price was traded at $63.8 per barrel. Since then, the demand has been increasing at a pretty steady pace. But the supply, which is the red line, has been quite choppy and even staying in a negative territory for quite some time. Especially since June, we're seeing this huge divergence between the oil supply and demand. Although the supply has been catching up a bit recently, the demand is still much higher than the supply and still grows at an increasing pace. In fact, there are many places around the world are already experiencing some sort of oil shortages and energy crisis. As the winter is approaching, Goldman believes the gap between the supply and demand will remain large or even keep widening. With such an increasing imbalance between the global supply and demand, there will be a much bigger upside for the oil price to run over the rest of 2021. And that leads to our second key highlight. Goldman has raised their year-end price target on Brent oil price from $80 per barrel to $90. And on top of the price target raise, Goldman also believes that the oil market supercycle just gets started. It is now looking more like a sustainable structural bull market rather than just a cyclical rotation trade. If we look at the Brent oil daily chart, we can see that the Brent oil price perfectly hit Goldman's previous price target $80 per barrel on the day they sent out the client report. And the price is breaking out from this 2 months consolidation and with an extremely strong short-term momentum. If we zoom in closer, we can actually see that since the early September, S&P 500 has crashed more than 5%, but the oil market actually went up 13% during this time. Yes, oil stocks are the best performing stocks in the S&P 500 so far, and the Goldman Sachs believe they will have an even much stronger run over the next 3 to 6 months. Alright, here are some of my personal thoughts. First, if you have been following this channel and my Twitter updates long enough, you will know that I've been bullish on the energy sector since the early of this year when the oil price had an over 5% daily breakout on the 5th of January. And I'm still holding my bullish view on the entire energy sector, especially these two markets, the oil market and the uranium market. About 2 weeks ago, I made a video talking about why the uranium market is going to explode to much higher price over the next couple of years. I would highly recommend you guys to check that video out if you haven't. As for the oil market, if we look at the big picture from the pure technical perspective, which is this monthly chart from 1998, we can clearly see that oil price has been perfectly traded in this 10-year supercycle. And right now, oil price has successfully broken out of this massive 20-year triangle pattern and officially enter a new potential supercycle. It would just be a matter of time for the oil price to reach the all-time high back in 2008 and make new highs. It could take a couple of quarters to reach that because we're still at a very early stage, but this extremely bullish oil supercycle is definitely here to stay. Another important chart that can help us to visualize why oil stocks could significantly outperform other sectors is the 30 years S&P 500 crude oil ratio chart from 1990 to 2021. When this blue line goes up, it means the S&P 500 outperforms the oil price. When this blue line goes down, it indicates the oil price outperformed the S&P index. There are two extremely important pieces of information that we can get from this chart that can give us a pretty reliable outlook on where the oil price will go relative to the broad equity index. First, similar to the crude oil monthly chart, which is priced in the US dollar, S&P 500 crude oil ratio also follows a roughly around 10-year supercycle. From 1990 to 1999, S&P 500 outperformed crude oil. From 1999 to 2011, crude oil outperformed S&P 500. From 2011 to 2020, the cycle repeated again. S&P 500 outperformed the crude oil over the past 9 years. And right now, we can see that since mid-2020, oil price has massively outperformed the S&P 500 index. The ratio has dropped from 140 to 57. On top of that, this new oil outperforming S&P cycle just gets started, and there's much more room for the crude oil to beat equity index over the rest of 2020 decades. The second piece of crucial information this chart can tell us is that the average value of S&P to crude oil ratio from 1990 to 2021 is 34, and the value of one standard deviation is 21, which means any ratio values above 55 or below 13 are extremely rare, and they're having a much higher probability to reverse back to the mean, which is 34. Right now, the value of S&P to oil ratio is 57, which is around one standard deviation above the average level. This tells us two things. First, the oil price is still extremely cheap compared with what the broad equity index is trading at. Second, as the most recent trend suggests in this chart, this ratio will still keep heading lower, approaching back to the average level, which translates to a much higher oil price compared to S&P 500. Based on today's S&P 500 level, which is around 4,350, that would translate to $109 per barrel on the Brent oil price, which is $19 higher than the Goldman Sachs 2021 year-end price target. So therefore, no matter if you're looking at a short-term trade or a much longer term like around 5-year investment, oil stocks will definitely play an extremely important role helping you to boost your overall portfolio return. Alright, before we go, let's come back to this WTI crude oil daily chart and then take a look at the current technical setups. Back in March 2021, crude oil formed this 2-month cup and handle pattern, and it successfully broke out of it in the early June and went up over 15%. But what happened later on was that the 20% correction that we had from July to August has broken the previous cup and handle pattern. The price touched the 200-day moving average on August 20th and it bounced back on August 23rd with a textbook bullish engulfing candlestick pattern, which is exactly the price action that we want to see when we look for a short-term potential bottom. So based on all these price actions, what I believe the oil price will do over the next couple of weeks is that it will most likely try to form another cup and handle pattern before it officially breaks out. So we could possibly see a short-term pullback on the oil price after such a bullish run. If the price drops back to 50-day moving average, for example, and bounce back from there, then that would be a great potential entry point to catch the next oil market bull run. Anyways, I will keep watching the oil market and keep you guys updated. Alright, that will be the end of this video. If you get any value of this video, please make sure you subscribe to this channel and help me turn on the notification bell so that you won't miss out any of my future videos like this to help you. Again, if you are new to this channel, my name is Vic. Thanks so much for watching guys, and I will talk to you guys soon. Bye for now.